Who are you dependent on in your business? What would happen financially if they were gone? And would your family be taken care of and protected if something that would happen to them significantly?
It's not about expecting the worst to happen. You're preparing for it, but it's more about respecting what you've built and protecting it.
Yeah.
And protecting it for your families. Welcome back to Focus on Life podcast, where two insurance guys talk about real life issues that we help our clients navigate on a regular basis. So what are we going to talk about today, Keith?
Well, I kind of want to put you in a scenario or a situation. Business owner,
Okay.
right? You have an employee of yours that does a lot of business for you, brings in revenue. You rely on this person wholeheartedly on your business, and they just don't show up to work one day. Not because they died.
They're fired.
Not because they quit or they got fired. They just don't show up.
Okay.
What do you do in that situation?
Yeah, that's a good question, right? I have no idea. No, I know where you're going with this, obviously, and that's topic for today is going to be buy-sell agreements, right? Or key management. Yeah. Well, if you think about it, most businesses have everything else insured, right? If you have equipment, vehicles, buildings, it's all insured, but the thing that makes all of that run, right? Your vehicles just sit in the lot and your equipment sits there dormant unless somebody's actually working it. So people actually run the business, not all these other things.
Yeah, I mean, they help you succeed in creating those tasks or doing those things that make your job easier. But the sole person that is the sales or the person that drives the truck, let's say you had a trucking company and you'd rely on this person every single week to drive to New York and back, and that person brought in this much revenue for you, but that person didn't show up. Truck's still there. Who's going to operate it? Right. That's the difficult part. So, key man policies, I feel like, is a very neglected part of small business owners' plans. It's not something you think about. It's very easy to look over because you think, well, it couldn't be me. I mean, it's kind of our world.
Well, yeah, it is our world. And that's we talk to people all the time about uncomfortable topics. And that's why a lot of business owners don't address it, because it's just uncomfortable to talk about. But if you looked at your employees as valuable assets of the business, and again, it doesn't have to be employees. You might be that person in the business.
Yeah.
Right? So we'll talk a little bit about that. But yeah, there's things that every business owner should be doing early on in the business, because a lot of times we find that business owners, especially partnerships, they don't address these issues until the business has already been made successful, because those early years, they're just too busy running the business and don't have time for it. And they don't even think about, well, what if things go wrong? They're just trying to build the business. But it really should be something addressed early on, because if you wait too long, maybe issues around who's the more valuable partner at this point, or how much do we need insurance for, come up, and you're not sure how to handle it. So
yeah, I think, and also in the beginning of, especially in small business, the person that started the small business is doing all the work anyway. But when they continue to scale their business and they continue to grow it more and more and more, that individual that owns the business, they may not be involved in the everyday, business model, right? They're not, they have somebody that handles the operations side. They have someone that handles the sales side.
Well, that's the goal of every business owner, I think, right, is to get to a point where you've scaled where you're no longer running everything.
Right.
You've gotten to a point where now you have a system in place, you have people that know what they're doing, and you're reaping the benefits because you took the big risk of either the early investment and the hard work up front, that now you're kind of maybe not sitting back and just enjoying it, but
maybe just watch that bank account grow.
But you certainly want to have people you can rely on to run the business if you're going to go on vacation or take some time off. And that's where, again, key man insurance, key person insurance has become a very, very important aspect of insuring your business, not just the equipment and your assets. So
yeah, so let's dive into what a key man is. Business owners dangerously focus on 2, 3, 4, maybe employees that do intricate things in their business. For example, one person may be bringing in all the revenue and doing all the sales portions of it. Another person what's another one?
Well, yeah, so you said it might be your top salesperson. It might be the person who runs the operations in the office, or it could be someone who the clients trust the most, right? The person that is the client-facing portion, and that's not always the salesperson. It could be your administrative person even.
Yeah.
Right? So
now let's put that in real perspective. You're a business owner. You have somebody that the clients physically trust and only want to speak to because that's the person that they have all their trust into, and that person passes away.
Yeah.
or that person has a sudden illness where they can't come to work, what happens to the business?
All right. So what the business owner needs at that moment is what? Is time.
Yeah.
They need time, right? And money.
Yeah,
And that's
well,
where the insurance comes in. So money basically is time. And we've talked about this in past podcasts where insurance in its purest form is time. You're buying time from an insurance company, whether it's life insurance and you're saying, hey, if I die too early, my family needs time to do the things that we were going to do. And money gives them that time.
Or they're accelerating all that 20 years worth of time that you were going to contribute that money and earn.
So same thing with a business owner. If you have a key employee that's lost, you need time to recuperate from that.
Yeah.
And it's not just all about money. It has an emotional impact, I'm sure, as for a lot of small businesses. You lose a key employee, that's usually a friend or a relative, and that there's a grieving process, right? So it's not just time to find a new employee or to work the numbers differently. It's getting through that process emotionally, and then it's a matter of retooling the business maybe.
Well, the truth of the matter is, too, is like that business is still going to operate. The doors don't just shut and we say, hey, we lost the person that all the clients trust. Yeah. We got to wait. Bills are still going to pile in. There's still things. There's still operations. There's still other people in the business that rely on income. And if this person's now gone, the revenue doesn't come in, so you can pay those people salaries. So having some sort of key man policy on an individual that is a key entity in your business, hence the name Key Man Insurance,
key person.
Key person. Key person.
Because probably more than 50% of the time, that key person is a female.
Yeah, could be a female. So key individual that gives us the ability to reframe, either give us time to bring someone else in to train to do that same task that person was responsible for, and still have the business continue to flow.
Yeah.
And
a lot of times it might be just, you may decide at that point, depending on what point the business is in its lifespan, is you may say, hey, you know what? I don't want to run the business anymore without this person. So the cash from an insurance policy will give you the time to keep the business afloat, to sell as a viable asset. Because if you can keep the bank at bay by paying the bills, if you can keep operations running, then the business remains a viable, sellable asset, as opposed to a business that's crashing and burning and you have to sell it for a discount. So
yeah, I feel like that would happen often. Like, just that person held everything together like glue, and now you don't have that person, and now you got to scramble, and there's nothing you can do.
Right.
Definitely a tough decision to make, but business owners have to do that. They don't have this stuff put in place.
Yeah.
So let's talk about another form of business insurance that most people, again, it's very overlooked, especially in partnerships. What happens if there's two partners involved in the business and one of those partners dies or becomes disabled? The ownership doesn't dissolve. It gets transferred. It gets transferred to who? It gets transferred to...
Right. So in that case, if you have two partners and one dies, the spouse is now owning his shares, or it's his estate or family. So the question now becomes, is the surviving partner, does he want to maintain a partnership with that new partner?
Has no idea what's going on.
Right. So how do you deal with that? There's something called
it's a buy-sell agreement. Yeah. So if you haven't heard of what's called a buy-sell agreement, it's a legal agreement between you and your partners. And it basically states that if one person were to pass away or become disabled, that their shares can be purchased by the remaining partners or owners.
Right. At a pre-arranged or pre-agreed upon price or value.
Depending on the value of the company at that point in time.
And pre-agreed upon funding. And the funding is usually through life insurance. Now, you can have an agreement. It doesn't have to be life insurance. The business could put aside funds for each partner to do that, to buy them out, or each partner could put their own funds aside and say, hey, I'll buy it with my money. But
what happens if they don't have the assets to do that?
Exactly.
That's the difficult part.
That's where the life insurance is the easiest way to fund those agreements, because it kicks in, the money becomes available right at the time it's needed.
Yep. So. And I've actually put an agreement recently for three brothers that owned a garage together, and all of them were equally responsible to work on vehicles. You asked me, I opened up a hood, I couldn't tell you technically where to put the oil. I mean, that's just me. I'd bring it somewhere.
You would not be a key man.
I wouldn't be a key man in an automotive shop. But these three brothers own the shop collectively together. They all equally are responsible to take care of that shop. And when I came to meet with them, I put them in the exact scenario. I said, now, if one of your brothers didn't show up to work, what would happen? All of you guys are partners in this business.
Yeah.
Does your partner's wife know how to change oil?
Yeah.
Does your partner, do they know how to change a transmission? Do they know how to rotate tires? The answer is probably no. But at the end of the day, that ownership now gets transferred to their spouse, and they still want to get paid. So how long would that last for? Are they going to continue to pay the shares to the wife that does not even contribute into the business or put their blood, sweat, and tears like their spouse
that's
did?
where things go bad, right?
Yeah.
And I've had similar situations in the past where business owners where, especially when it's family, right? Brothers, you said 3 brothers, right? And usually the discussion is, oh, well, no, we're family. We're going to take care of each other's families, right? And that's a non-legally binding agreement, but it's what most people will do. And they don't think it through and say like, well, of course we want to take care of each other. We're brothers. We're going to take care of our separate families. But after a while, that becomes troublesome, right? Because now the resentment builds up. 2 surviving brothers have been taking care of the deceased brother's family for a long time, maybe years. And it's a drain on the business without any type of contribution. So it creates emotional problems, maybe tension in the family, and it could even eventually end up in courts, in legal systems, which it often does. So especially with family, but even if you're not, if you have partners and you want to protect your families, if your business is the sole provider of these families, then you've got to do this stuff. It's malpractice not to do it, because if one of you passes away, you can't expect the partner to take care of your family indefinitely.
Yeah. Well, I think it also puts a damper on the actual business itself. So back in that scenario of 3 brothers that run a shop, if one of them passes away, sure, you could say in the back of your mind, we're family. We're going to take care of your wife and your family for as long as we possibly can, or forever is what they'll say. We're blood. But now that person is lost in the business. How much more work can they take on? So now revenue starts to drop. There's not as much revenue coming in because that person's not there to bring in the revenue. Right. So putting together a buy-sell agreement allows us to be able to say, hey, the evaluation of the company was worth X amount at this point in time. And there's all different types. There's cross-entity purchases inside of it. And we won't go into all of those dynamics of it. I think it'd be a little more complicated if we went into that. But you would basically, that insurance policy would be owned by the business in one fashion. And then that money that gets paid to the business will get paid to the wife to buy their shares outright.
Yeah.
So now it's back. Now it's just 2 business partners.
In a cross-sell purchase by sell is where maybe you have 2 partners. One partner owns a policy on the other, and vice versa. And they use that money to buy out their family. And the agreement says they have to use that money to buy out the family at an agreed upon price. So this all goes back to our whole kind of theme of this podcast, which is focus on life, right? Because if you've taken care of these things, if you set these things in place, you can focus on your business and you can focus on life. You're not distracted by thoughts of, oh, what happens if one of the 3 brothers goes to the doctor and the doctor says, well, we found something on an X-ray and we don't know. But for a month, while they're trying to figure it out, maybe he's okay. But for a month, the whole business is up in the air and everyone's worried and thinking about things, not focusing on the business. Taking care of these things allows you to focus on life, right?
Yep.
Or whatever.
And now, in some cases, there are types of insurance contracts that are more than just if they were to pass away. If they were to be disabled, or if they were to have some sort of cancer event and they didn't want to spend their last days working in the shop. They wanted to be able to, live their life, whatever the case is. So having that flexibility and having that closure of knowing that I can focus on my everyday life, I can focus on my fun life, I can focus on life in general, by putting these plans in place is usually pretty significant.
Yeah, and the sad thing about it is you could fund these plans very inexpensively. You could use term insurance with living benefits that covers a whole host of different possibilities, and it's not a big drain on the company's balance sheet. So you could get really elaborate with these and use policies that build cash in them so that they can serve 2 purposes. They could be a buy-sell agreement, but if nothing bad happens and you get to the point where you're selling the business or retiring, the cash value in those policies can now be used for whatever you want. So there's a lot of different ways to go about it, but it doesn't have to be elaborate. It can be a very simple agreement. I'm going to buy your family out. You're going to buy my family out. Here's how much we're going to pay for it. And we have 2 policies in place place to do that. Very
Yeah,
simple.
it's great.
So, all right. So really what buy-sell agreements are is it's not really a business issue. It's more of it's something to avoid legal and emotional nightmares, right? That will come up if you don't address it. So you're not doing it for the money, for the value of the business, even though you are. You're really doing it for your family. You're doing it to avoid a complete disruption, family tensions, potentially lawsuits, which we've seen happen. So very important to do if you own a business and you have partners.
Yeah. So here's your challenge. Ask yourself this. Who are you dependent on in your business? What would happen financially if they were gone? And would your family be taken care of and protected if something that would happen to them significantly? If they were to pass away, would you be scrambling and trying to figure things out, or would you be comfortable where you're at?
Yeah. So it's not about expecting the worst to happen. You're preparing for it, but it's more about respecting what you've built and protecting it.
Yeah.
And protecting it for your families.
Absolutely.
So if you're a business owner and you haven't addressed the issues we've talked about today, it raises some serious questions, right? So when we come across a business owner who hasn't addressed these, what's the first thing we think of?
Where else are they lacking? What else haven't they addressed? Are they a successful business owner to begin with if they haven't addressed these things?
Is your customer service up to snuff? Are you good at managing your inventory? So again, it does all relate back to being a competent business owner. This is a key issue that should be addressed, and many don't, right? So again, for those of you who haven't addressed it, I'm not trying to insult you, but I guess I kind of am, right?
Yeah.
It's something that you have to take care of. If your family depends on your business running, it has to be done.
Yeah. And if you sat there listening to this episode thinking that's me, then you should reach out to people like us. So this way we can at least educate you on it and put you in a better place so you can focus on life.
Yeah. That's always the point, right? Get the focus off of these worries and focus more on life.
Yeah.
So thanks again for joining us today. Look forward to seeing you on the next one.